Good morning and welcome to LNG Marketplace Weekly News Flash. Here's the latest news we have selected for you from all over the media. The top story of this week reported by Reuters. Saudi Aramco has signed a 20-year agreement to buy LNG from the US-based Sempra Energy forthcoming terminal. Saudi company will also buy a 25% equity stake in Port Arthur project in Texas. Aramco apparently is still looking for LNG traders. The Asian and European spot prices for LNG are falling fast as cargoes are offered against a little buying interest, as we read on Finance Yahoo. The price situation has led to contango. Contango happens when the future price of a commodity is above the current price, which forces the traders to store commodity at sea, waiting for better prices. This is a long-established practice in oil, but not in LNG trade, due to the complexity and cost of keeping natural gas in liquid form on ships. If you want to know more details and numbers, check the link to World Oil article in the description box. The flexible US LNG contracts are driving global commoditized spot market growth. Trading houses, Trafigura and Gunvor, for example, have been able to enter LNG market due to the increase in flexible US LNG cargoes. There's absolutely no obligation for what you do when you pick up your US LNG cargo, and that's the difference from how LNG projects used to be developed in the past. More about it on S&P Global Platts. China's decision to impose 25% tariffs on US LNG could delay or jeopardize some proposed US LNG terminals. As China was considered one of the biggest contributors in sponsoring them, the companies awaiting final investment decisions might be the most affected ones. The increased tariff will also make non-US LNG more attractive for China. Thus, Australia and Canada could actually benefit from it. This piece of news we found on Seeking Alpha, Cron, and oil price websites. With all the US natural gas overcapacity that even resulted in negative prices recently, US cannot easily meet its own domestic natural gas needs. Why not? There are currently no US LNG carriers in operation, and under U.S. sabotage laws known as the Jones Act, any cargo transported between two U.S. ports must be carried on a U.S. flag, a U.S. crewed, a U.S. built, a U.S. owned ship. And most likely, the Jones Act will not be waived in the present political circumstances, and the investors willing to build or retrofit the U.S. flag LNG carrier might pick up the opportunity for the domestic LNG service. This we read on LNG World Shipping. We have some new production coming online. Sempra Energy has started producing LNG for export at Cameron LNG project in Louisiana. This we found on Seeking Alpha. Argentina is also about to export its first LNG. This is according to Hellenic Shipping News. And Malaysian Petronas has achieved its first LNG production from its floating LNG facility on the island of Borneo, as stated on Oil Price. The question arises, in those excess supply times, who are the growing LNG importers? Let's recap what we have found in the press. Pakistan is one of the world's fastest growing LNG markets, and its demand could soon more than triple, according to Finance Yahoo. Japan is increasing imports of US-made LNG as a part of its policy of diversifying resources. This we found on Nippon.com. Also in Asia, Taiwan might absorb a significant portion of upcoming LNG supply as it aims to increase the share of LNG from 38% to 50% by 2025. This is according to Hellenic Shipping News. In Europe LNG regasification, Portugal hit a record high according to S&P Global Platts. On the same website, we found that Colombia could also be forced to sharply increase LNG imports amid declining natural gas reserves and growth in domestic consumption. Also in Latin America, Altamira Terminal in Mexico seeks for 12 cargoes from May to July, while usually 9 LNG cargoes is received in the same period. This we also read on S&P Global Platts. And last but not least, after two important container shipping companies, Hapag-Lloyd and United Arab Shipping Company, have merged, they're seriously considering the conversion of their mega container vessel to LNG fuel. The retrofit of the first one, Sahir, has already been undertaken as a pilot project. If successful, the conversion of the remaining 16 container ships will follow. The conversion to gas fueling will cost $30 million per vessel, and there is a great interest in this project from the industry. This we read on Marine Log. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in.